let's talk about that. So we're like 11 years now into this bull market. What happens in the next 5 years? Is there a crash coming? We obviously have an election coming up in the U.S. We have all sorts of things happening in the world. What do you see in the next 5 years? And crash-wise?
Yeah, so one of the things that we're in new territory. The fact that central banks have created over $22 trillion worth of money kind of out of nowhere in the last 11 years is really potent for markets. And the fact that they can still do that, the major ones can still, like the Fed, the European Central Bank, Bank of Japan, can still create money, keep rates low, or keep the cost of, therefore, governments borrowing low. So therefore governments borrow more money to manage themselves and so forth. This creates a situation where, like in any budget, you're not really taking into account what's coming in and what you're spending. You're taking into account what you might be able to get because it's artificially fabricated, like money's coming out of electronic coffers.
They're just printing that.
And
basically.
yeah, they're just electronically creating that money, and that's what's happened. And so as a result, real economies throughout the world just are deteriorating, and growth is deteriorating, manufacturing is deteriorating, production is deteriorating, and particularly in developing countries and emerging markets, it's even worse because they don't also have the same sort of constant investment in their real economies, not in their markets, but in their real economies, especially when they're lagging the larger economies, or the larger economies basically need to keep their money back home. So you have the situation where the money's not going into the real economies of the big countries, and it's certainly therefore not getting into the real economies of the emerging market countries. And then you throw into that geopolitical risk and trade wars, which have created a whole additional wrinkle of economic uncertainty into the world. And I think that we are in a prolonged period, we're starting the beginning of a prolonged period now of a recession or even worse, depending on which country. And that's going to also create a lot of political tensions, a lot of people being very unhappy, a lot of demonstrations and unrest. So I do think we're in that. Now the markets might continue to stay relatively positive during that period because they are being fed money. But in terms of real life and real people throughout the world, I do see growth slowing down, recession starting, and as you get further away from the money-creating countries like the U.S., it becoming more and more precarious.
I mean, this is one of the longest bull markets we've had.
In finance, it's a very big bull market.
Right.
And stocks are certainly up. And even when they have very volatile days, there's been much more up and down coming into markets now than there have been before. It's still in an upward trend for the most part, a lot of the markets, but on any given day you can have these like 100-point up and down, or multi-100-point up and down swings, and that's because a lot of the information that's coming into the markets now, whether geopolitics, elections, UK Supreme Court's voting that something a prime minister did wasn't legal. All of those sorts of things that come in create more uncertainty into the market. So they're buoyed up by money coming in from central banks, but they're jiggery because of these events, and then the real economy suffers from both.
Yeah, and your 25-cent contract strategy kind of potentially protects you from that crash because you're not involved in being long a lot of these assets. So you can take advantage of pockets of volatility here and there through that strategy. Right,
and the strategy is basically you're in and out that day. So the idea isn't to take a view over the long haul in any one name or in the markets in general. It's literally like what's happening right now. So where are the sharks on Wall Street and throughout the world positioned right now, and what do we need to look at to potentially position alongside that, but for very short periods and in a very cheap way.
Right. It's a fascinating strategy. It's kind of exciting.
Yeah.
It feels like I'm kind of on the inside, like I'm one of those analytic high-speed traders where I can get in and out. But most people don't have experience of buying and selling something the same day. Right? The average consumer doesn't do that usually.
No, I mean, a lot of people, first of all, look at things over the long haul or allow their fund managers or their advisors to do that for them, most people, in fact. So there is an educational component to doing basically the strategy for yourself. And the idea of a 25-cent contract is that ultimately you're not exposing a lot. You're not buying a share for, $100 or $200 or $300, whatever dollars. You're buying something very cheap. So if it doesn't work out, the downside is limited. But the upside is potentially very high because you're starting at such a low level and you're looking at very short periods of volatility or momentum or movement in the market on that day. So setting up the trade is actually simple. We'll recommend a strategy, and then based on someone's account, they can execute that strategy. They basically buy what we suggest if they choose to do that, and then set a limit. So basically, we talk about something called limits, which is that you can basically lock in what your gain could be. And that way you're also protected in case you're not watching it at that moment. I think that we're starting the beginning of a prolonged period now of a recession or even worse.
Hi, it's Brian Rose from London Real. I recently sat down with Nomi Prins, the former Wall Street trader you would have seen on Fox, CNBC, and Bloomberg Television. She regularly advises the Federal Reserve, IMF, and World Bank on important financial policy matters.
I've realized over the years that people don't have the same exposure to trading systems on Wall Street. And so I looked at what are some of the ways that I can create something that regular people on the ground can use to access some of what Wall Street does all the time.
We had an incredible conversation, but what really stood out to me is her brand new 25-cent contract strategy, designed to leverage a little-known market anomaly that happens every day around 10 a.m., if you know what to look for.
The more comfortable you feel with financial elements, the better you'll be at managing them, and the more confident and empowered you'll be in your own life in any aspect of your life, not just with respect to money.
Now, as a former Wall Street trader, I am super excited to share this investment strategy for the very first time. As the host of this episode, I'm able to offer you exclusive rights to a seat at her 25-cent contract live training. But you must act now to secure your spot. So click on the link below or go to londonreal.tv/Nomi, that's Nomi, to secure your spot. And I will see you there.
I myself, my graduate degrees are in statistics and operations research, undergrad in math. So that was always, yes, my kind of angle into Wall Street relative to trading or sales, which was some of the other types of jobs on Wall Street. It was always about the math, the trends, the numbers, the securities, and how they behaved under certain conditions. And that's always what I looked at throughout my entire career on Wall Street. And I always also looked at the downside, not what happens if a trade works, but what happens if it doesn't work. What are the risks you should be looking for, and how can you best sort of protect that investment for those risks? And so that's they're a very cheap way of taking an investment into the market, particularly in times of volatility, that take into account what the big sharks are doing, that take into account why volatility is happening, and presents a way for a person to take advantage of that scenario in a cheap way, and in a fast way, and in an easy way.